Hello, I'm Asif Farouk of Finextra and we're here at EBADay 2014 in Helsinki, and I'm with Dean Sposito of Deutsche Bank. Dean, thank you for joining me. One of the topics that was covered was that banks need to be able to disrupt themselves in order to grow, and that's a theme that was reiterated by Andrew Tarver, the key challenger speaker today, that banks must be willing to kill themselves almost to grow. Do you think that's a sensible strategy for growth?
I think there are varying levels of disruption. So disruption as a concept, I think, is a good thing. I think we owe it to ourselves, we owe it to our clients, to the sustainability of the business, to the relevance of the business, to continually question our business models, our strategies, what's working, what's not working, listening to the clients very actively, and off the back of that, continuing to develop and innovate our client solutions, our value add. Of course, disruption in the sense of, killing ourselves literally, I don't think is a sensible strategy in banking. Because I do think, we have so much emphasis placed on trust, on stability. When we're out with clients, one of the things we always hear is they place a lot of emphasis, maximum emphasis, on stability of our infrastructure. So there we have to obviously be very careful in how we really deal with that concept of disruption.
Okay, so another topic or another talking point that was brought up earlier was that banks are losing on to this trust that they have with their customers, and what the tipping point would be for banks to hold on to this trust. And Generation Y was mentioned. Do you think that's the tipping point?
Yes, it was brought up, true. I actually think the generational discussion is very critical, interesting, and very important to us. Also, I take part occasionally in so-called recruiting days. And it's interesting really to speak with what we call Generation Y, or university students, graduates, who are also looking at different career paths, how they view things. I think obviously we need to be very cognizant of how society is developing, because those are our future colleagues, hopefully. Right? We want to be attractive to them as an employer, as an industry. We need good talent for our sustainability, for our survival. And I also think that they will, of course, through their lives, be moving into corporations, into different sectors of the economy, which will then work with banks. So there, I think trust is still critical, or it still is an elemental function of the relationship, just because of the part and parcel of what we do. So I would say definitely yes, but probably changing to an extent.
Okay, so we hear a lot about innovation, and Andrew Tarver again said that banks are audacious to consider the new products and services they're delivering as innovation. He called them audacious. So is that something you agree with?
He did push the envelope a bit on that. I think there are different levels of innovation. So, and it's a bit apples to oranges. I really think the discussion can be. In different sectors, innovation is perhaps much more grandiose, much farther reaching than in other sectors. Banking is a sector that is really, let's say, built on a foundation of stability. It's developed a lot over centuries. What we do maybe is considered baby steps to another industry, or considered, like Andrew referred to, as not being innovative at all. But for us, perhaps, a refining in our product offering, in our client solutions. And it can be something that, is actually quite interesting if we start really talking about global currencies, global payment systems, how we move money and how we also message the information attached to that across time zones. It's actually quite sophisticated and quite innovative, but maybe it doesn't quite seem that way. I think that for our industry, what we develop is still what I would consider innovation, perhaps not to the degree as in other maybe high-tech companies, that type of stuff.